losses when the market declines. If your portfolio value falls below a certain level, you'll receive a margin call. This means you need to deposit more money or sell assets to cover your losses. Vanguard, like other brokerages, charges interest on margin loans. These interest rates can be high, further eroding your returns. More importantly, margin calls can force investors into making rash decisions, such as selling investments at a loss to cover their margin requirements. Vanguard has a responsibility to educate its investors about the risks of margin trading. However, the brokerage's website and marketing materials often downplay these risks, focusing instead on the potential for amplified returns. This lack of transparency can have devastating consequences for unsuspecting investors. Navigating Vanguard's fee structure can feel like traversing a labyrinth. The brokerage's website is a maze of fine print and legalese, making it difficult for the average investor to fully comprehend the costs associated with their accounts. This lack of transparency is unacceptable. For example, Vanguard charges inactivity fees for accounts that fall below a certain balance or haven't been traded in a specific time frame. They also charge fees for services like paper statements, wire transfers, and account closures. These fees might seem small individually, but they contribute to the overall feeling that Vanguard is nickel and diming its customers. Vanguard has a moral obligation to be upfront and transparent about all fees associated with its services. Investors deserve to know exactly how much they are paying and for what. Hiding fees in the fine print is not only unethical, it erodes trust and undermines the principles of fair and transparent markets. The human cost of Vanguard's fee practices is often overlooked. While the company is known for its low-cost index funds, the reality for many investors is far more complex and troubling. Behind the charts and graphs are real people whose financial lives have been negatively impacted. These are not just numbers on a spreadsheet, they are life savings, retirement dreams, and financial security. Stories abound of investors who have seen their retirement savings dwindle due to hidden fees. These fees, often buried in the fine print, can erode the value of investments over time, or been forced to sell investments at a loss because of unexpected margin calls. These margin calls can come at the worst possible times, compounding the financial strain. Consider the story of a retired teacher who diligently saved for decades in a Vanguard target date fund. She trusted that her investments would provide a comfortable retirement. Unbeknownst to her, the fund's expense ratio was silently chipping away at her returns year after year. This seemingly small percentage had a massive impact over the long term. By the time she retired, the cumulative impact of these fees had significantly reduced her nest egg, leaving her with less financial security than she had anticipated.